This is a weekly outlook for GBP, JPY, and gold. As always, we will review the current fundamentals and any specific fundamentals that we will be looking out for in the SharmaFX group throughout the week, and then we'll move into the technical analysis for GJ and gold. Let's start off with yen first from the fundamental side. So before I jump into this article, I want to review some of the fundamentals that we have been seeing leading up to today. Much of the attention in regards to the yen has been around the Olympics and the COVID updates. The Japanese government is pushing for the opening date of July 23rd for the Olympics, and we've seen that Japan is getting the support from the Biden administration for it as well. However, there are two possible market sentiments in this case that we're going to watch out for. The first is optimism if the Olympics do happen, because then Japan is going to have increased tourists, which is going to help boost its economy. And that's necessary, especially for the post-COVID recovery for Japan. The second sentiment is market fear, because with large crowds, the probability of another wave is going to increase. Given that Japan is already behind UK and the US in mass vaccinations, that could cause a little bit of market fear or market uncertainty from the investor perspective. So now what we want to see is whether or not the Olympics will happen, or will they be postponed again, and what will the market sentiment be then? Coming into this article now, we're seeing that there is some market uncertainty ahead of the Olympics because of a vaccine shortage, which is slowing down their vaccination program in Japan. And right now, vaccination is extremely important for Japan if they do want to move forward with the Olympics safely. We're seeing that cities across Japan are suspending vaccine appointments because they are not receiving any clear updates from the government. And the Olympics are set to start in 3 weeks. So this slowdown in vaccines can cause some uncertainty from an investor perspective. We're already getting news that the country cannot vaccinate a majority of its population before the Olympics. So now the question is, how are foreign investors and the spectators going to react to this uncertainty? There is a possibility of having Olympics without spectators, but how comfortable with the investors will be with that option is now what I will be looking out for. Any fundamentals in regards to that this upcoming week and leading up to July 23rd, when they are opening, or they're pushing for the opening date for the Olympics. Also, the National Governors Association has set the supply of Pfizer, which is one of the two vaccines that Japan is using at the moment, is going to decrease significantly in July. One of the ways for Japan to combat this will be to approve additional vaccines from other companies, even if they have slightly lower effective rates, or perhaps even trying out something similar to the UK where they extend the time between dose 1 and 2 to provide more vaccines to more people, so most people can at least have their first layer of protection. On the other hand, we have some optimism from the UK, but again, take it with a grain of salt. PM Johnson plans to end social distancing in England from July 19th, but the confirmation will be released on July 12th. Johnson announced that face masks will no longer be mandatory in all settings, and the government will no longer instruct people to work from home, but that decision can also be made on an individual level from businesses, whether or not they want to allow their people to work from home. The government, however, does recognize that cases will increase as restrictions are lifted, but they will be at much lower rates. A majority of the population, about 64% of the adults, have had their 2 doses so far, which is still bringing in a lot of optimism from the vaccination side. But people are still being asked to stay cautious as the cases may surge towards the winter. In this next article, you can look this up, and there's an entire list of the changes that will be made in regards to the ease of restrictions. Finally, we have some fundamentals about gold. It seems like we have central banks finally jumping into gold. Some central banks across the world have been increasing their reserves of gold, and some are announcing plans to purchase even more. This is mainly supported by economies opening up, global trade strengthening, and crude oil prices increasing, which is caused by OPEC unable to reach a conclusion about their production and abandoning their meeting without a deal. At the moment, the oil market is facing tight supplies and rising prices. So we do have OPEC meeting coming up this week. And that is what I will be watching out for, along with the G20 meetings that we will see on Thursday and Friday. So that brings us into our economic calendar. So far, we've kind of had an easy start to the week. majority of it just being PMI news in the London session from the Euro side. After that, we had a bank holiday in US today, so not a lot of volume happening in the New York session. So I do expect the volume to pick up a little bit towards the upcoming London session, where you have the construction PMI, German factory orders. You also have housing equity withdrawal. But the more important thing that I would be personally watching out for is the German economic sentiment. So I would be paying more attention to this out of everything that's coming out of the London session. And then I will also be paying attention to the OPEC meetings as well, mainly for the purpose of trading gold. And then we have some services PMI news. This is going to be the first New York session of the week. So I do expect some volume to pick up around this time, especially with services PMI coming out. I do expect some good volume, maybe about 20, 30, 40 pips, maybe even of scalps, and then maybe some potential to turn scalps into swing trades. We have a pretty easy London session on Wednesday. And then we have JOLTS job openings coming out during New York session. So that's another thing that I'm going to be watching out for, especially for gold or any USD pairs that we will be trading. And then as we continue down, not much coming out in Asian session this week at all. And then again, a pretty easy London session. And then we have unemployment claims coming out and the first day of G20 meetings. So we have, from a macro side, we have some good fundamentals coming out, which we want to be watching out for. And then we also have some medium to low impact news coming out during New York session. So it seems like this week, New York session is going to be the more fundamental dominating session. Let's move on to the technical side for GBP, JPY. Let's start off with the yearly time frame. The first one that I'm going to mark off is going to be that top wick rejection that price has tapped into earlier this year at 156,700. And then I'm going to mark off previous resistance that price made here. And the reason being is because if price breaks below that, then we can look at some of the lower levels down here. But this is the more important level that I want to see. And price is kind of just hanging around this area of 152,100. If price breaks below that, then we can look for position sell opportunities. But if price breaks above 156,700, then we have position buy opportunities. But other than that, we have some intraday time frame levels that we can watch out for that we can trade based off of. Now I'm going to start creating the zones, and we are going to modify these zones as needed when we drop down to lower time frames. So you have this entire support zone that's being formed right above 152,100, and then you also have kind of this resistance area as well that price rejected last quarter and once in 2018 as resistance. So it seems like right now this is where price is kind of hanging around. We already kind of made this bottom wick rejection this quarter, and it seems like we want to continue bullish, but again, it's too soon to make any of those distinctions just yet. Now, as we drop down to the monthly time frame, same exact thing, where last month price closed bearish, but it made a bottom wick rejection right into this area. This month, we've also made a bottom wick rejection. Right now, we're sitting at a doji at the moment for the monthly time frame. So we want to see, is price going to continue above that or not? And we're probably going to find levels as we drop down to the weekly or daily time frames that we can watch out for. So on the weekly time frame, you have this entire kind of resistance area right up top here. That price is rejecting at the moment. So that 153,800 area, the price closed above it in May. And then after that, you had a doji close rejecting this area, and then same exact thing, bottom wick rejection. Then in June, we came all the way back down, closed bearish. And in June again, June 21st, we had a massive top wick rejection to the upside, closed bullish with a lot of bullish volume. And last week, we closed bearish with a top wick rejection up top there again. So 153,800 is going to be a crucial level if we're looking for any buy opportunities to the upside for any swing trade opportunities. And then also I would watch out for the current support that price is making at around 153,400 to look for any sell opportunities to the downside. As we drop down to the daily time frame, this is where you can start kind of adjusting your zones as you need to. So I would personally bring that zone all the way down here. So right now we see clearly on the daily time frame that price has been consolidating here for about 4 days now. If price can break above this area, then we are going to continue bullish. I would personally wait for this entire area here to be cleared out. So wait for that entire area to be cleared out, and then you have some great opportunities to the upside for about 50, 60 pips, turn that into about 136, and then continuation back up to that 156, 700 area that we discussed for about 275 pips, right? So you have great opportunities to the upside from there. If price breaks below this 153, 400 area, then you're going to continue down for the wick fill for about 30 pips. This could be your scalp opportunity, turned into a swing trade for about 131 pips to the downside to come back and tap into 152, 100 area, which we know from the yearly time frame is the previous resistance area right about here. So going back to the daily time frame, so these are two areas I'm going to watch out for. Other than that, this entire range of about 40 pips is a no trade zone for me. Let's go ahead and move on to gold. So you have fundamentals here for gold as well that we're going to be watching out for this week and then also the next couple of weeks. The first area that I'm going to mark off is going to be this 1680 area where price made that bottom wick rejection earlier this year. The next area is going to be this top wick rejection. We're kind of sitting around this area of 1800 at the moment. So that is something else that I'm going to be watching out for. And then finally, the current resistance that price is making at 1900. So these are the three levels I would mark off on the yearly time frame. And then as we drop down, we're going to start creating some zones here. So based off of the quarterly time frame, I would mark off this entire zone that price has rejected as support, and then also the current zone that we're sitting in, because this is the entire resistance zone that price has been rejecting since 2011. And then we finally made that final rejection in the last quarter of 2012, and then we continued down from there in 2013. So that's a very crucial level. We've also rejected this area multiple times, and now with the new quarter starting, still it's quite early for any pair to kind of figure out where we're headed this quarter, because it's only been a couple of days since this new quarter has started. But we have some crucial levels that price needs to break before we can kind of determine whether we're looking for any position buy or sell opportunities. But as of right now, even for swing trade opportunities, I want to see that 1800 break and then continuation up so we can turn some scalps into swings and then ultimately into position trade opportunities. And for sells, I need to see the current quarterly candle to flip bearish and then continue down to 1680 flat. When we come onto the monthly time frame, we see how price just keeps closing into these areas over and over again, either as resistance or either as support. So same exact thing. I need to see the current monthly candle flipping bearish and then continuing down for any sell opportunities or breaking above 1800 flat. That's the only analysis that I would do on the monthly time frame. Looking at the weekly time frame, we're clearly still in a downtrend. We're still respecting lower highs being made. So you can see that price consolidated here, keeps tapping into it, and then you see some nice bearish volume to the downside. We also created a lower high right about here into the same exact consolidation area. We're still creating some lower lows right into this area. So as of right now, still very hard to say whether we're going to continue bullish or bearish, at least for this month or this quarter. We definitely need to see how is price going to react to 1800, which we know is another crucial level coming down from the yearly time frame. So this is a higher time frame resistance area. When you see price tapping into this area, when you drop down to the 30-minute time frame, 1 hour time frame, 4 hour time frame, daily time frame, you need to be very cognizant of what's happening here, right? So that's not a level that you can simply just ignore, because this area has been respected as resistance and support in the past from higher time frames and down. Another thing that I want you guys to note is that major bottom wick rejection here. So maybe last week we closed grabbing a lot of liquidity from these previous consolidation areas, this resistance area. So this is where we probably grab liquidity, close bullish to give this week some momentum to continue bullish. But again, wait until 1800 is broken. Wait for that confirmation, and trust me, you're going to have much better trade opportunities on the other side. For any sell opportunity, same exact thing. So just wait for this entire zone here to be broken. If you're looking for any quick scalp opportunities, you have an entire zone from 1800 coming down to 1770. But again, those are going to be some high risk, high reward opportunities. So you definitely want to watch out for any of these confirmations going down to at least the hourly time frame. I want to see the hourly in my favor when I'm looking for any buy or sell opportunities. If the hourly is bullish and you're looking for sell opportunities on the 30-minute time frame, I would highly suggest just waiting until you get the confirmation. So this is a weekly outlook for this upcoming week. As you can tell, we're sitting at pretty important key levels on gold and GJ. So definitely just wait for your confirmation. You have a ton of news coming out. G20, 2 days in a row, you have meetings, and then you also have OPEC, you have job openings, you have unemployment claims. You have a ton of news that's coming out this week. And then even from a macro fundamental perspective, we have a ton of news to look forward to. So just be patient with it. New quarter just started. Give it enough room to make its top and bottom wick rejections, kind of move in the direction that it wants to, and then look for your trade opportunities. So this is the time to definitely wait for that confirmation before you start jumping into trades. If you guys have any questions, feel free to comment below and I will try to get back to you as quickly as I can. And other than that, trade safe and make sure that you're not giving back any profits that you've made so far in the last week or even in the last quarter.